I'm in conversation with Professor Jannie Rossouw and Johan, who is the Chief Economist at Old Mutual. Thanks very much, gentlemen, for staying with us. Professor Jannie, I want to ask you about, it's great in economics. It's not an exact science. Different economists forecast differently, and there are a plurality of ideas. But we're a developing economy, and there's an argument that you can't expect a developing economy to have the same inflation target as that of a developed economy. So, for example, United States and Europe, their inflation target range is something like 2%. It's not a range, it's a target, a point. So why do you think South Africa should be aiming to do that? And is it actually possible, given that we're a developing nation?
Yeah, it is possible, and there's no reason why there should be an argument around developing economies. What's different about the developing economy? Inflation is not a policy instrument, as I've said earlier. So I can see no reason why we can't have the same inflation target as a developed economy. It's a bit like the debate in the 1980s, when inflation in South Africa, on average for that decade, was nearly 15% per annum. It went as high as 18.5% in 1987. And then there was an argument where a developing economy, we cannot ever have low inflation. Of course we can have low inflation. Any country can have low inflation by just simply using sound policies. So at least under the leadership of Dr. Chris Stoltz in the 1990s, it was shown that South Africa can have low inflation. And my argument is simply that South Africa can have lower inflation and a lower target than what we have at the moment. And it's no argument to say we're a developing economy as opposed to a developed economy. But I would like to hear Johan's views on this point, please.
Johan?
If I may, I absolutely agree.
Go ahead.
I absolutely agree. Inflation, high inflation, hurts the poor the most. So the governor has often said that exact thing, and I totally agree, and with Jannie, that we actually should have a lower inflation target. While we might not necessarily go to the 2% that we see in the euro area or in the US immediately, the governor has talked about 3%. I think Treasury has mentioned the number 3%. I think that's a far better number than 4.5% or the 3 to 6% range. One of the previous governors of the Reserve Bank used to get inflation stuck around 6%. Now we're at least talking about 4.5%. I think we should move towards 3%. Well, of course, I don't think it's going to happen overnight. It will be an implementation period if and when we get there. So it doesn't necessarily mean that interest rates will have to stay where they are. Just don't think interest rates will go down as fast as many people perhaps have been expecting.
Yeah.
A lower inflation target will likely also mean a more stable currency over a period of time. It doesn't happen overnight. The rand is a pretty volatile currency, but lower inflation will not only benefit the poor, it will also mean more stability in the local economy.
Yeah, so we know that South Africa is heavily dependent on the rest of the global economy. That has not really been very supportive of late. Our main trading partner, China, has been having a little bit of an economic wobble. But let's focus on the story of growth, Professor Rossouw. How are we doing in terms of the structural reforms that are in play? Do you think that we're on the right track to begin to see the growth that we need to deal with some of our social economic woes?
Well, there's no doubt that we need rapid economic growth. At the moment, our population growth rate is about 1.5 to 1.8% per annum. Our economic growth is less than 1% per annum, so on a per capita basis, we all get poorer every year. So, of course, we need very rapid economic growth, and that will also help to get rid of unemployment. And we are not on that trajectory. We've had Eskom problems since 2008. Kids going to high school now seem to think that load shedding is what should be the normal. Our network industry is not working. Our harbors now collapsing. So until such time as this government starts to focus on the important aspects to get us on a higher growth trajectory, we will simply not have such growth. The current South African government is focusing on the wrong things and not on the things that will bring us back to a higher growth trajectory. But again, I would like to hear Johan's opinions.
Johan,
if I may,
before you
yes.
continue, Johan, Professor Rossouw has pretty much highlighted the issues that we're all familiar with. But the question that I'm posing is not about what happened yesteryear, but I'm asking about, the actual actions that are taking place. We're hearing about partnerships between government and the private sector. We're hearing about task teams that are dealing with various sectors of the economy around Transnet and so on and so forth. Do you think enough work is being done such that this time next year, you and I are having a different conversation about the economy's economic growth trajectory?
No, not yet. But having said that, we're probably never going to see the 5% plus growth rates that we had in the early 2000s, around 2004, 5, 6, 7, because of these issues that Jannie rightly mentioned. But Jannie, you've got a trademark, I've got a trademark, and mine is privatization by stealth. So this government has allowed, where state-owned companies have been failing, they've allowed the private sector in there. So Nompo, I think that it's a slow process. It's not next year. That's why the answer was no. But gradually over the next few years, the private sector will help sort out these structural issues around electricity and logistics. So I do think we're on a trajectory that's slightly more positive than what we've had over the last few years, from a downtrend in economic growth to a slight, notice the word slight uptrend, likely around to a sustainable level of around 2 to 2.5%. So it's not the 5% plus that we need, but 2.5% will be slightly better than the average that we had over the 5 years to 2019. So it is helping us to move in the right direction, this private sector involvement in the economy. And totally, again, it's not enough. We could do a lot more and faster. And one big thing that we've been promised is cut red tape, make it as easy and cheap as possible to start and run a business. There's been nothing done on that front, and that is one of the things that could drive confidence. So we need to lift confidence through more and better policies. We're not doing enough, but what has been done will make a little bit of an impact over the next few years.
Yeah. Professor Rossouw, one of the issues that the Reserve Bank governor mentioned was the issue of public debt. It's something that he keeps on referring to. And I've heard other central bank governors, including the US Fed Chairman Jerome Powell, talk about public debt. Just enlighten us as to why this is so important.
Nompo, let me just say I'm glad to hear that Johan is more optimistic about economic growth than what I am, and I hope Johan is right, because we desperately need it. However, one of the impediments to economic growth in South Africa is the level of government debt, because there's a large tax burden on government debt. And these taxes, incidentally, mostly paid to members of pension funds in South Africa, because the South African government debt, to a large extent, being owned by South African pension funds. Now, as Johan mentioned, privatization by stealth, what I'm concerned about is stealth taxation. To make the government debt affordable, the South African government might smuggle more taxes into the system without us noticing it. For instance, in the last budget, we had stealth taxation through bracket creep, where tax brackets were not adjusted. So the governor is rightly concerned about the debt burden, because the debt burden places a large responsibility, a large commitment on the South African government, because the interest on that debt must be serviced. And as the government borrows increasingly more money, the private sector is squeezed out of the capital markets, and it will make private sector investment increasingly more difficult.